As many investors look to FedEx for insight into the state of the consumer, our next guest says the shipping giant can be a key bellwether for global trade trends, including China. And Barry, Threadneedle Strategies founder, joins us now. So what does this indicate to you, what we've seen from FedEx, especially in the China story?
Well, I think it's consistent with what we've heard, which is the China reopening has not been going at the pace and the acceleration that everyone had hoped. And I think we're seeing that in one of the small data points that point to how trade flows are going.
And so what are the broader implications then beyond FedEx for investors who are not only interested in China in and of itself, but also, of course, how it relates to the rest of the globe?
Yeah, I think it looks to a couple of things, Julie. We've seen a shift towards services and the shift towards the consumer spending on experiences instead of on stuff. And I think this is consistent with a pattern that we're going to continue to see, which is particularly with a high inflation environment, which we still have, where the consumer's looking at every dollar of discretionary income and saying, what do I want to do with it? I think this is another sign that they're going to look again at moving away from buying products and moving in towards services and experiences.
Speaking of that, so inflation has been a problem globally, not just here. I mean, you have the cost of living crisis just around the world. So does that say to you, because the consumer is being more discretionary with their spending, so we're seeing some impact in terms of FedEx, people not getting as many boxes as they used to, and including you have the China story there. Does that say to you that the consumer is less resilient or going to be tightening their wallet even when it comes to experiences?
I think overall, yes, and I think we're starting to see early signs of that, Diane. So, for example, if you look at auto loan defaults, they're inching back up towards that 2008, 2009 arena. We're seeing it in terms of drawdowns on people's savings. So while so far it's been relatively robust, relative to all of the noise we've heard about recessionary trends, the consumer, I think, is starting to pare back.
And so that does imply that a recession will be coming, right?
Yeah, and we're going to go back into defined recession territory. Do you remember, is it 2 consecutive quarters of GDP?
Right.
Look, I have definitely I felt like Cassandra. I always felt there was going to be a hard landing coming. I've moved to thinking actually the Fed is going to pull off the soft landing. I do think a slowdown is coming. It's just not going to be catastrophic, in my opinion.
Okay.
Hope so. And you're going to stick around. We're going to talk about much more stuff.